Believe it or not, the New York Fed and the San Francisco Fed have just released a study talking about rates going back to zero. Yes, the return of ZIRP. First experimented in 2008, obviously revisited in the Great Recession and the pandemic. According to the Fed survey from New York and San Francisco, they say there is a 9% chance that we are hitting zero sometime in the next 7 years. More importantly to you and I, because let's be clear, 7 years is a long time, the chances of hitting zero rates in the next 2 years is 1%. One of the things that I've put out there for quite a while now is I believe Jerome Powell's main mission is to get us off zero. Doesn't like the fact that we've gone to zero with every crisis. Higher for longer, we have talked about plenty of times. I do think it is very interesting that even the Fed themselves say there is a 9%, let's just call it 1 in 10 chance we are going back to zero sometime in the next 7 years. I found that article very, very interesting. Well, we are back in the tariff kerfuffle. We have President Trump and his administration sending out some say 14, some say 18 different letters talking about tariffs as high as 40%, with some of our allies getting 25%, such as Japan and South Korea. I think the market has sniffed this out. I think what the market is telling us, given the kind of muted reaction, this is just standard Trump 101. This is the art of the deal. Send out some crazy high, this or that, force the other party to react. And again, we get somewhere better. Again, these tariff letters went out. They are prescribed to be the best and final. I don't think anybody believes that. I think everybody believes this is just a negotiation tool. And we shall see. We shall see. The taco trade that was named, a month ago, looks to be still playing out. So we shall see where Trump goes. Again, we have a long time between now and August 1st. I think the chances of 25% on Japan, South Korea, and our allies is frankly pretty high, given that the UK got 10%. But that said, 10%, UK is we actually have a trade surplus with the UK. We do not with South Korea. We do not with Japan. So, let's see where this goes. I'm going to bet 90% of me say this is just another Trump negotiation, but we'll see. We'll see what Japan, South Korea, and others say to these letters. I do want to let you know about a video premiere coming out at 11 a.m. today. I had a conversation with Ken McElroy yesterday morning. We're posting it already today. And there's a lot in that. Most importantly, I'll give you a little tease. He says that we are in the third inning of Class B and Class C multifamily pain. We talk about a lot of the syndicators doing stupid things and buying stupid deals and losing lots of money. We talk about that and much, much more. Set your alarms, 11 a.m. today. There is a premiere video with just Ken McElroy and I that you will not want to miss. There's a lot of I would say a lot of hope and a lot of action that you could take from that video. So hopefully you tune in, you check that one out. Goldman Sachs is doing a lot of updating here recently. Goldman Sachs says that the Fed terminal rate should be between 3 and 3.25. Let's call that 3%. That means the Fed could technically cut roughly 6 times and get us there, 5 to 6 times. They do now say that their first cut will be in September, not December. Goldman Sachs says there will be softer tariff impact and some disinflation. Remember, we have inflation, disinflation, and deflation. It's going to be very interesting to watch inflation because we have some watch goods and obviously services. So again, something to watch for. Let's go to Goldman Sachs. Actually, several articles I read on Goldman Sachs. Goldman Sachs has lowered their 12-month recession odds. It got as high as, I think, 55%. It is now at 30. Most recently was 35%. So they are lowering their recession odds. Both Goldman and Bank of America have raised their S&P 500 targets. They are both now at 6,600. Again, it'll be very interesting to see where the year goes because, again, we're talking 7,000. 7,000. Dan Bird, the one and only stock analyst on this channel every Sunday, is talking about an 80% chance. Yes, Dan called 80% chance the S&P touches 7,000 this year. So, wow, that's a bold call if I ever heard it. On that end, Goldman Sachs has turned bearish on the 10-year note. Clearly, Goldman sees rates going lower, lower, lower. Goldman was calling for a year-end 10-year target at 4.5. They are now at 4.2. 4.2 means we will get lower interest rates, lower mortgages, perhaps as low as something in the low sixes, maybe high sixes. So again, we shall see where that's going. Basically, Goldman says the jobs data appeared strong. This is referring to last Thursday's jobs numbers. But in actuality, it was very weak. It looked strong because of oversized government hiring. I don't remember the exact numbers, but let's say Friday's number was 140,000. Roughly 70,000 was private sector, and the other 70,000 was government. That is very odd for the month of June. So again, Goldman is saying that jobs data is dirty, weak, much weaker than expected. Thus, Fed cuts coming in September. This according to Goldman Sachs. It's interesting to see in the real estate market, real estate investors, you and me, we are stepping back into the market. I love to see it. In fact, I got a comment yesterday and I put it out on X or Twitter. If you're not following me on X, please do. It's one rental at a time with the number 1, as I couldn't spell out one rental at a time because there's too many characters. I'm sure you can find me. But yes, there was an investor who got a real estate property for 27, I think it was 27% below list price. They did not think they would get it, but they took a shot and they got it. The reason I bring this up is investors are stepping back into single family homes. From 2020 to 2023, you and I only made up 18.5% of transactions. Last quarter, we made up 27%. Folks, this is what investors do. Home buyers are scared. They pull back. Inventory grows. Days on market grows. You and I, the people that know what they're doing, we write disrespectful offers. We follow up. We get great deals. We find motivated sellers. We get seller seconds, seller carries. This is what we do. Investors are needed. Investors are welcome. Investors are making the real estate market go. In total, there were 265,000 real estate investor transactions last quarter, up 1.2% year on year. Inside that article, they talked about mom and pop investors. Again, you and me. Well, maybe not me. If you have 1 to 5 units, mom and pop investors make up 85% of all transactions. That is awesome. One rental at a time, get to 4. You guys know the drill. 85% of landlords own 1 to 5 units. This is often called mom and pop. Another 5%, so you could say 90%, own 6 to 10 units. So 90% of all investors, mom and pop, own 1 to 10 units. This is what one rental at a time is all about. I encourage you to learn the game, get a buy box, join our school community. Remember, folks, you can still try before you buy inside school. We have the one and only financial firefighter willing to cover / refund your first $20. The fact that you haven't joined school already for a free month, try and buy, is crazy. It's just crazy. 7 different accountability groups, Sunday conversations with me and experts like Thatch and Derek and Jason and so on and so forth. I do not know why you're not taking advantage of Mark's and Mikey and others giving you a month to free, right? A refund to try before you buy. I just don't understand why more of you haven't taken advantage of that opportunity. But hey, it's okay. We'll keep moving forward. Larry Summers is not happy. I'm not sure. Has Larry Summers ever been happy? He just always cranky. Larry Summers has been quoted as saying, there is no objective economist who would characterize the big, beautiful bill as a boon for the economy. Well, Larry, that's not very nice. And it's also not very accurate. And I continue because Larry actually talks himself in circles by the end of this. Next. In the same article, it highlights that the White House Council of Economic Advisors says that the big, beautiful bill could generate 11 trillion in deficit reduction in the next decade. I don't know about you folks, but we should all hope that is true. And then Larry Summers goes on to say that is respectfully nonsense, basically calling the folks at the White House Council of Economic Affairs idiots. And then right at the end of the article, Larry sneaks this in, which I thought was just so crazy. None of us can forecast what's going to happen with economic growth. You know what, Larry? Neither can you. Neither can you. You have heard me talk about over the last week or so since the Big Beautiful Bill got done that I don't know. I don't know what's going to happen. There is a possibility that this Big Beautiful Bill really spurs an economic renaissance. There is enough tax incentives for businesses and whatnot to invest, to build manufacturing production, to invest in lots of areas. I'm not saying that will happen. I'm just open-minded enough to realize it might happen. Also, let's not forget, there's a lot of folks on no tax on tips and Social Security that are going to end up with more disposable income. They have a high propensity to spend. Folks, if you are making, I don't know, $10,000 on tips, and I don't know, 2,000 of that used to go to the federal government, guess what? You got almost a $200 plus to your monthly disposable income. And again, folks at that economic ladder have a high propensity to spend. They will spend that $200. That will go into the economy. So, Larry, you are absolutely right. None of us, including you, can forecast what is going to happen with economic growth. And we should all hope we burn $11 trillion off the deficit. That would be very, very good for the economy. That would be very, very good for our kids. That would be very, very good for our grandkids. Stop rooting against the possibility. You just sound like an old grumpy grandpa. Stop it. Crazy. All right. Former Fed President Worsh is getting some love, talking about possibly being the next Fed chair. I have sympathy for Trump's frustration over Fed policy. On top of that, we've got OPEC Plus coming in with a surprise. OPEC Plus will add more oil supply in September. Remember, folks, oil is in everything, and lower oil increases liquidity, helps consumers. And again, consumers at the low end have a high propensity to spend. We shall see where this goes. Lastly, we did get some economic data this morning from basically small business survey. What's going on with small business? Basically, uncertainty is still prevalent in the small business arena. You got to remember, a lot of small businesses are directly impacted by tariffs. The fact that the tariff noise is still, uncertain really means that they are still hamstrung. This will eventually alleviate. Hopefully it alleviates this month and we get tariff clarity and we can all understand the moves and we can keep going. Folks, let's congratulate two people who joined school yesterday, Daryl and Matthew. Thank you very much for joining school. Folks, again, I know a lot of you are thinking about it. I know a lot of you should join. We're now over 420 wealth builders. You want to be in a wealth building community like ours, join. All you have to do is follow Mark, the financial firefighter. He'll work out getting you reimbursed. And I hope to see you in there. And 7 accountability groups, thousands of dollars in education. You can't go wrong. Also, we're loading the Vegas event from last year because we're over 400. Day one is already loaded. We'll get some more going. So, folks, I hope you have an amazing day. Like, subscribe, comment. Again, set your alarm clock for 11 a.m. We're doing a premiere of a very, very valuable conversation with Ken McElroy. That is 11 a.m. Pacific time. So 2 p.m. Eastern. Thanks, folks. Take care. Later.